Hi everyone, my name is Anne-Marie Band. Today is Tuesday, April 1st, and this is the Moneyball Morning Report for the Benzinga Pro platform. We begin with the the E-mini S&P 500. Looking at this weekly chart, we can see that we had somewhere really between the week beginning October the 4th all the way to the week beginning March 3rd, we had an accumulation space. We now are in distribution at a discount, sitting under the 50 simple moving average on the week. That's going to be an important number for us to stare down. 57.24 is what I'm seeing there. The expected moves from the implied volatility is about $56 from where we sit. So that gives us 56.76. So here's where we go. Let's put it up here at, where are these wicks? We're going to try to match it with a wick, right? So 56.80 or so on the top side. And on the bottom, we've got 55.70, right? So this is what the expected moves are telling us in general, right? This 55.70-ish area. I think I want to move it over to that wick. Nope, it needs to be a little higher. Let's use that wick. 55.73, right? So that's the expected range. Now listen, doesn't mean that we can't blow out of these. It's just telling us what the implied volatility is sitting at inside of the trading space today. We can easily expand downward or upward, and we have those ranges marked for us in general. If we go to the daily chart, what we can see is if it comes into those expected moves, right, we've got ourselves a particular entry. I like it near the lows, right? So we let it crash through that and then let it rebound. Then we have a potential long up into the region of 56.80. All right, so that's what we're staring down. From the hourly perspective, what we can see is that we have a double top that occurred at about 5 to 6 a.m., really targeting the move off of the breakout of the prior day's Globex high, with the stop down right into the heavy congestion zones, right? And so the thought is maybe we have a rinse and repeat day in my mind. I'll be waiting for this retest down at the bottom before I initiate a move, simply because I don't quite know what's going to happen in this pocket. It could bounce and then fail. If it bounces, but it cannot get up over the 1 hour high of our Globex open, that's around 56.45. The short will ensue, and this will take it into the levels. Let's take a look at the NQ. From a weekly perspective, inventory accumulation, inventory distribution, these two are the same size. So it's a measured move. It came right into the bottom of it. Expected moves today for the NQ. Hang on, let me double check. Looks like about 240 to 250 points from where we sit right now. I'm going to round it up and say 250. That brings us to 575 to 600. And we'll leave that line there because it could easily overshoot. Maybe we go here, right? Could easily overshoot that line. So we want to be careful about thinking an expected move is going to give us an exact number. It will not. So there we are. Sorry about my anal retentiveness trying to get that number right, but we are staring down a dip into a floor that caused a lot of reflexive buying. Yesterday, we had a note from Mentor Q that said, hey, 55.65 was a huge number in the ES. They also mentioned the numbers for the NQ, and when we have those very big lines in the sand, what we want to see is how price action behaves around them, right? It's not a place where we go, ooh, it breaks out, I'm taking it long. Ooh, it breaks down, I'm taking it short. Unless your move is immediate. You don't want to do anything like that, right? And so the thought process is, currently, as we sit, is this forming a double bottom, right? Here's the momentum for this edge. This momentum has not raised yet. It's not at inflection, so it still suggests that we're trying to find support beneath. If we move into the hourly, you can see the same sort of drawing that I have here. This one is at the bottom of yesterday's move because we are inside of that range already. This region here is let's see what that is. Let me see what this opening range is. I want to make sure I did that right. Yes. We're coming into the bottom of this morning's opening range. Notice what we did early. We gapped down, we moved down, and then we held the low of the prior day's opening range, and we began to bounce, right? And so that motion says, hey, we could be in a sideways action, something that gives us a megaphone to take a look at, and heavy congestion brings us all the way down into 19,181, and that is awfully close to the measured move that is in play according to the option chains. So if it were me, I would take a look at these expectation events and say, all right, that's the top of the range, 19,587. That's the bottom of the range, 19,139. Why don't I try to get along deep into this motion and see if I can walk through these upper steps? And we know the steps that they bump into often and have trouble are these Globex opening ranges. Let's go to the YM. Let's take a look at the week. Strongest of the bunch. A lot of people talking about the fall of American exceptionalism or whatever. Our Dow is holding up really fairly well. It is the only index that is battling the weekly 50 and has not fallen beneath it. The measured move, which I think we ultimately test, unfortunately, if you're looking for straight up longs, is down here at the base of the value area high, which is 39,080. If we go to the daily chart, we're going to see that we are under the 50 and under the 200, like the rest of the formations in the indices that we do stare down. We are bouncing and trying to hold that edge. Let's take a peek at what the measured move looks like here. We don't have good chains for. I did not realize that these guys had such illiquid strikes. So they don't have anything at least 80 days out. So we really can't look at that, but 80 days out, it says we're about 3,000 points from where it sits, and wouldn't you know it, that's our line, right down here. From this 42,000 to 38,000 is the expected move that's being priced into the charts at this particular juncture, right? So 3,000 to the upside puts us right back at the top of the range, and that's a pretty wide 80-day range event in my mind, right? Pretty wide. But it is tracking with the expected move, and we're calculating those in totally different ways. Let's go to the 1 hour chart in the YM. What do we see? Right? Opening range formation is, let me borrow this line. I did not realize that I did not map this one out, right? There's the high of the opening range, 42,000. It breached above it, but did not make the high here. Look at where it went to. The top of the opening range of March 20th. Okay? So they're using these as lines. Unequivocally, they're using them as lines. There's too many times where you can see exactly what's happening based on these opening ranges. You don't want to consider that as pure coincidence if it happens that many times. So what did we just do? We broke down, look at the double topping formation here in the YM, double topping, momentum steeply off. What should it do under this downward moving 50? It should rotate all the way back down into these lower opening ranges. The first one is way back here, several days past, and that number's 41,920. The next one is the high of yesterday, and that is 41,680. Okay, my thought is let it come down. You don't need a 150-point stop here. Let it come down into the low value node, or let it come close and then form structure like this that tells you it's going to move back into the north. My thought is that it bounces off of this heavy congestion zone here at the round number of 42,000, and we can see it doing exactly that, right? So what's the trade? Ultimately, I'd like to see it come down into these lower levels here, right around 41,724, and then we can stair step it to the upside if it holds, or we get a bounce that fails to hold that opening range, and then that puts us into the short. That number is 42,138. Let's go to micro Bitcoin, and let's look at the weekly. Also, this one is holding its formation pretty well. It's been 5 weeks since it tested that 76,000 area, 77,000, somewhere around there. This is a very likely mean reversion trade. So it should stay very choppy if it's going to be a mean reversion, very choppy, fill in the profile, come in and actually kiss that 50 as the 50 moves up and price moves down to meet it. If it cannot hold this zone above 80, it is very likely to come back into the VWAP at around 67 to 70. Okay, that's what we're staring down. If you want to take a look at where the price action sits, here's the moving average cross that lifts it a bit higher. Thin volume node, potentially the pullback into 83,000 gives us a long. Let it shake itself out. Don't jump right in. This is an hourly chart. The moves are going to shake. Everybody sees it. Some people are moving down. Some people are moving up. Wait for the winners to show themselves and then chase. Right? Not necessarily chase, but wait for the winners to show themselves. And then you'll have yourself a better trade in terms of risk. Don't jump in. You don't have to do that. Let's take a look at oil. It's been running pretty hot, right, from a daily and an hourly perspective. From the weekly perspective, it's just bouncing off the framework of the lows. Those lows are 66. The next line in the sand, probably 74. 73.50, right? And then if it gets to the point of control, we're looking at 78. We're still very, very range bound. Again, my concern is the performance of West Texas Intermediate, which is a grade of oil that needs to be mixed with a heavier grade like Brent. I really want to see what this crack spread looks, or the spread, not the crack spread, that's between gasoline and the actual instrument. I want to see the spread and see how it's moving in Brent crude. This is a little concerning to me, but neither here nor there. Let's go to the daily. Here's the daily formation. What's it doing? A downward to flat 50, a downward 200, trying to hold above the point of control. Dips are very likely buy zones in this formation, and dips are likely to come. They could be shallow, looking at about maybe 70, right? 70 looks like a really nice number from a daily perspective. They want to hold these zones, 69.80 to 70. Momentum is extremely high. Doesn't mean price action can't go higher, right? We could move sideways and then rocket off again, or we could have a shallow dip and continue to the north. It's all about the slope of the moving averages here. And as long as they stay up, it's a dip buying formation. Let's take a look at what that setup might look like in this expanded zone. So really the breakaway formation is down here at 70, right? I would like for it to come into that zone. However, if the profit target ends up being a new support zone, then that number around 71 is going to be the nice area to buy. Here's my thought. Let it come to 71. If it starts bouncing, then it's going to get into the Globex open and then move to the north. If not, it's going to fade, right? This is a topping formation from an hourly perspective, right? That's a topping. So it's going to find support. The question is the support at 71 or is it all the way back at 70.20, right? Which is kind of a key number, 70.23, something like that. And it's also the 50, right? We're going to have very volatile days for the next bit. We simply are. All right, let's go to what can you say about this beast, right? I mean, holy smokes. This feels a little fear-based, right? We're coming up on this 3,200 marker. Let me make sure that, let's see what the expected move for oil is, first of all. Expected move for oil, $2. Wow, that's a lot, right? So we're looking at 73.50 to 68.50. Wow, that's a lot of volatility. Oh, and it just fell like a stone. Wait a second. Now that's 65, so the implied range is $1.20. Take that into consideration. Here we have gold. Double check what we're looking at. 31.58. This, we've got 3,200 as that next space to look at, round number, right? 3,200 is about that measured move. Maybe they'll come in shy of that and try to force it down, but this is the wave, and the heavy congestion, not so heavy, the heaviest congestion is right here, and the measured move puts us up at 3,200, extremely high momentum. But listen, look, this one stayed extremely high for days and days and days, weeks and weeks and weeks, right? It's the slope of the trend that tells you whether this is going to break or not, right? Slope of the trend. And once the slope begins to shift, the bounces that fail will give you a resistance area or an old support zone that will give you what you're looking for. From a daily perspective, heavy congestion between February 5th to the breakout of March 13th, and it just measured move all the way up. And so is this a zone that I would say, if you're long, not a bad idea to take some profit? Yes. However, the pullbacks have been rock solid buy zones. And right now, that looks like somewhere around $3,112. That's what we're staring down. If we look at the hourly chart, we can see the same sort of thing going on. This is the move across the formation. This is one measured move. This is the next measured move. This is the third. And so we are coming into the opening range formation of the first hour. Notice we dipped below it and held, but that is clearly a topping formation that should give us a support test that's a little bit lower. Now, what's the overall slope of trend? It's up. So this downward pressure event just says, let me see if I can find support. That's how you read a stochastic momentum index. First trend, and then, is it moving up? Okay, we're going to be searching for resistance. Oh, is it moving down? Oh, I'm looking for support inside of the trend space. Okay? All right, ideally, I would like the pullback to come in, $3,128. That's going to give me a nice buy zone. All right, let's go to SPY. Let's look at the weekly. Same thing, SPY holding up way better than the Qs, right? Accumulation between November the 4th week, March the 3rd week, And now we're sitting right down in this range. We are under the 50. We have not been able to hold a close over the 50. We are underneath the 5, and our weekly VWAP is downward trending. Again, trend, you look at the tight trend, it's down. So if you see a bounce action event, you don't see it here, but if you see a bounce action event, it's telling you, hey, I'm looking for support or resistance, whichever way the chart's going. This is double top formation that continues. Now we're looking, I think the bounces are going to sell again, but the bounce could be pretty good. We could go to 570, right? It just depends. We've got a very data heavy week ahead. Let's jump right to the 1 hour. Here's the thought. Here's the opening range. We're below it. Notice we bounced, could not get above that 4 hour formation the second time, right? Maybe it just tested it and then rotated down. My thought is, let's let it come down into yesterday's Globex high. That's $552. And let's see if the SPY can bounce back or it continues. But you know where your stop is. If it loses this zone here at 550, let's see what SPY says the measured move is. 4 points in either direction. That's 552 to 560, right? Which is actually, is this the high? 559.79, right? Which is right up there at the measured move. So remember again, before you run off thinking, ooh, this measured move stuff, I'm going to use it. It's a guideline of what the traders that trade the options are thinking about doing. Okay? All right, let's go to the Qs. Start at the weekly. Reflexive bounce right on the bottom of the measured move. How do I know? What measured move am I choosing? Old resistance, support. I'm going to draw the box around there, replicate it, move it down, and then we see where that 468 is sitting. All right? Thank you very much, sweetheart. Off of that, we see the daily, more downside pressure potentially, but the bounce is still sitting there. So what do we want to see? Well, we want to see if they hold. Look, we're underneath the low of the Globex, and their Globex is 4 a.m. We double topped, fell right back into the range, and moved down. So if you're staring this down easily, you could go to a 30-minute chart and see the topping formation that gives you that opportunity to go, oh, maybe I go back into prior support, right? And it bounces all the way up again and then straight back down. What have we got? Sideways slosh. Let them sort it out. If we move up, great. If we balance ourselves up and start holding motion that says, you know what, this is good structure, I'm going to be able to buy the bottom and sell the top. But right now, you better be trading small if you go, all right, I'm going to buy this because it fades, loses the structure down here, and then immediately recovers, spikes to the top, and falls. What do? I'm going to look at the 50, and I'm going to go, okay, that 50 is down to flat, so my bounces are going to be sell zones. And I'm going to come into support until the chart figures out what's going to happen. So for me, I'm expecting a fade that if the buyers hold this level, it's going to bounce again to the upside. If the buyers don't, I'll get stopped out for very small risk, and then I'll wait for the reflexive edge for the chart to tell me which way it's actually going. All right, right now we're in the middle of a great big slosh. Lastly, we look at UPRO. If you were there for our midday session, you can see, UPRO had the bounce. I talked about the bounce coming into potentially 75. It bounced into 74. Guess what it's coming down to again? 72. Is it going to hold it? Maybe, right? Maybe it'll go to 71 and then try and bounce. But once again, because it's a bottoming formation, potentially that's going to give you a long with a pretty tight stop, right? Especially if you're trading the options. And don't go out a million years on those options. Just go out a week. We have a week is going to be like 100 years. Okay, so just be careful. Here's the short action event. Remember, I said, hey, let the market do its reflexive bounce. That's going to give this a potential double top, which might bring it down into the top of the last breakout, which is about $23.90. That's going to make for a nice long, especially if you're saying, hey, how can I protect my IRA, since you can go long in this space and you don't have to worry about shorting and that sort of thing. All right, everyone, take care. I'll see you soon.